Welcome to TradFi to DeFi, a community-driven podcast about crypto and decentralized finance. This is Tyler Sherwin, and I'm joined by Contagion. Together, our goal is to teach, encourage, and inspire you to seize opportunities in this emerging world of DeFi. Let's get started. Hello, everybody, and welcome to the TradFi to DeFi podcast. I'm your host, Tyler Sherwin, joined by our co-host, Contagion. And today we are reeling from a lot of excitement in the industry that I think has caught many by surprise and was quickly developing over the last weekend. And here we are now in a totally different world than we were a week ago. And of course, if you've been following this space at all, you know exactly what I'm referring to. I'm referring to Sam Bankman-Fried, aka SBF, and the collapse of the FTX empire. John, it was just like a few short days ago, it feels like, where SBF was a media darling, superstar in DC, and had a dramatically dedicated fan base, of which I had many friends who very much considered themselves big SBF fans. A lot of people feeling a lot of whiplash, a lot of fear and betrayal. Since the last time we recorded our podcast, some of this stuff has developed and it's still developing, but I figured it might be helpful if we kind of go over what's happened. But I mean, what are your initial thoughts about this whole situation, John? FTX collapsing, SBF taking client funds and running. I mean, it's a pretty rough situation.
It is, and when it comes down to it, it's, it's fraud, laws were broken, trusts were broken. But I like the way you said, some of your friends are big fans of his, and that's not uncommon in this space, is to have favorites and people you look up to, and he's what the industry needs, but in my lifetime, whether it is in all facets of life, whether it's a politician, a religious leader, a business leader, when you go a little bit too far out on that limb and put people on a pedestal, when they fall, you fall with it. You're really hurt by it because you really thought this person was the guy or gal, and when they fail and fail spectacularly, it hurts. It hurts quite a bit, and there's people reeling from that, and but I think it was like this time last weekend when I saw the first text about, hey, I think there's something, I think Cointelegraph, I don't know who published the first thing. Yeah, it's like there's something fishy going on with FTX and the FTT token, and things might not be what you think it is. And then it just quickly snowballed into what we'll cover a little bit more granular, into just a story that I think will live on for a long, long time. And it's not over yet, right? I mean, the story's not completely been told. There are echo effects and contagion and stuff that we'll be dealing with for quite some time. So it's worthy to pay attention to it, that's for sure.
Although this was a centralized exchange that blew up, there will be implications for all of crypto, and some regulators and lawmakers want to apply consequences to DeFi completely unrelated to these activities here, as a consequence of this. And so, where did we start off this whole thing? Well, SBF was widely considered by some to be the, quote, next Warren Buffett. I mean, this is a headline that looks very eerily similar to headlines you might have seen about Elizabeth Holmes and the Theranos company. The media loves to, kind of glorify particular individuals and hail them as heroes, especially when they have such a compelling story. I mean, this guy was, considered to be somebody who lived in a humble lifestyle despite being a billionaire, yet had this crazy amount of illegal, fraudulent activity happening on his exchange. And so we'll just give a quick little summary of it. Right now, where we are is that FTX has filed Chapter 11 bankruptcy and all of its affiliated entities. And a lot of this stemmed from them owing their partner trading firm, Alameda, $10 billion. And what had happened was that FTX, basically in a nutshell, lent out customer funds to Alameda to speculate on a variety of crypto projects. And this is, first of all, fraudulent, illegal, unethical. It violates their terms of service. FTX had made promises and assurances to their customers that they do not use their customer funds for speculating. And to get a sense of the scope of this empire, this is a fun little graphic that I found showing Sam Bankman-Fried, SBF, and a handful of different affiliated entities where large investments in early stage crypto startups were made. Some of these including Voyager and BlockFi. So here you can see Alameda made a large amount of investments. And one of the ways that this was accomplished was that FTX has this token called FTT. Have you ever traded FTT, John, or ever interacted with it?
No, I have not. And mostly there's quite a few centralized exchanges that have their own token. I know crypto.com has the CRO token, and some smaller exchanges have their own little token for numerous reasons. FTX is particularly notable, and crypto.com is, you could stake them and get a return, and it was great. And I've never traded it, never touched it, but I was aware of it.
I tend to stay away from exchange tokens, and I think this is actually a really good reason why. Celsius had one. Cell token was the name of it. And although they will often publish white papers in tokenomics, most people believe that these things are printed out of thin air, right? They're not really equity. They don't actually give you voting rights in the leadership of the company, although sometimes they might try and pay some lip service to that. Really what they do is, they function as like a proxy for your belief in this company. And if you are bullish on that company, they want to try to drive value to that token, and they'll do it a handful of different ways. With FTT in particular, they offered discounts. They offered fee rebates. By interacting with the FTX products, you could get discounts on these products with this FTT token if you would stake it on their platform. And so one thing that was interesting was that FTX had pledged to commit a certain amount of their fee revenue to buying back the FTT token and burning it. And so naturally, people would speculate on this token, and you can see, according to this chart that I'm sharing on the screen here, that people were overwhelmingly bullish on FTT because they're bullish on SBF and Sam Bankman-Fried and the FTX empire. But really, what was happening was that there was this incestuous relationship between Alameda and FTX under the hood. Alameda came first. It was a hedge fund started by Sam, and it grew to be very successful, but wanted a better trading venue to execute a lot of their trades. And so they actually created FTX, and all their trades for Alameda were taking place on FTX. But the news that you alluded to that started this whole thing, John, a week ago, was a CoinDesk article that pointed out how Alameda basically had a bunch of FTT on their books that was a majority or a significant portion of their assets. The basic assets minus liabilities ended up with a majority of their net equity being in this FTT token. And if you think about it, this token was basically worthless. This token was something that could be printed out of thin air and basically served as just sort of a wild hope that SBF and the FTX empire would continue to accrue value. And so what happened? Like what started this whole kind of freaking out? Well, they had basically, customers began to kind of doubt that FTX could actually make good on redemptions for the crypto that was held on their platform, because people were starting to speculate that SBF had sent funds to Alameda to bail them out after the Terra Luna crash. I don't know if you heard about this like several months ago, John, but there were theories and rumors going around that Alameda was hit pretty badly by the whole Terra Luna crash. And some on-chain sleuths have actually found what they believe to be a transfer of FTT tokens to Alameda in the wake of that controversy. Did you hear about that, John?
Yeah, and that's the great thing that with the blockchain is there are people that can go in there and interrogate wallets and interrogate the flow of funds and can find these things out. And it's kind of a shame it came to this, but I think those type of services in the future are going to be pretty much in demand. That's due diligence right there. And thankfully, because there is such a thing as a blockchain and cryptocurrency and cryptography, that can actually happen. It is a public blockchain. It is viewable by anybody, and you just need to know what you're looking at. It's some of it's a little beyond my ability to track it down, but it's no different than somebody working at the Department of Treasury and tracking money laundering. You know, they just have to follow the trail, and eventually you'll put together what actually happened. That's really what's going on now, too, I think, even to this very moment. People are still trying to put all these pieces together.
Yeah, and the part that was interesting is that due diligence was one of the main reasons why the FTT token continued to plummet. So one of the things that was interesting about this was that people started to get these rumors swirling, right? And so Binance actually, people don't know this, that they actually incubated FTX a while back and were part of the initial seed investment. And so what's interesting about that is Binance had a bunch of FTT tokens that they had, and so CZ, the CEO and founder of Binance, went on Twitter, and this is what really spooked a lot of folks. And I remember this happened, I think it was on Tuesday. He basically announced that they had $2.1 billion worth of FTT that they would like to liquidate, and they plan to do so. And so announcing that you're about to sell a token that a lot of value is tied up in on the FTX exchange really spooked the markets and spooked a lot of customers.
Well,
And so
I think that was kind of funny though, because in his tweet it's like, well, I'm going to do this slowly and over a couple months, not to spook the market, but actually that's exactly what he did. And whether he intended to and there was malicious intent, people are really kind of playing with that idea. But yeah, it's like, well, over the course of a couple of months, we'll exit our position, and we're just going to go in a different direction. And then people caught wind of that, and that's when it really got going.
And that's what I have here on the screen here. It's a chart showing the FTT token, which soon plummeted across the next few days. And last I checked, I think it was hanging around like $2.50. CZ, whether he meant to or not, you raise a good point. Was it malicious? Potentially. Was it something that he was trying to give warning about and be helpful? I think there's some pretty interesting theories, because in a shocking twist, as soon as he announced this, I think it was later that day or the next day, he announced, along with SBF, that Binance and FTX had signed an agreement for Binance to acquire FTX. And so what was really interesting about this was that Binance caused this, run on the bank in some ways, right, and spooked a lot of folks. FTX halted withdrawals soon after that announcement. And then next thing you know, Binance and FTX have come to some sort of an agreement for them to be bought out. But it wasn't meant to be, and then Binance actually walked away from it. And so when you had mentioned due diligence, it made me realize that that's exactly what CZ had done. They took a day's worth of due diligence to look at the books. Turns out that everything that they had heard about in the CoinDesk article was perhaps even worse than they had thought, and so decided that the assets of the company were definitely not worth picking up, especially when there are so many significant liabilities. And this would have been a very nice positive resolution for a lot of the customers, perhaps, of FTX. But unfortunately, they're left to now go through the bankruptcy proceedings and may, in fact, not get very much. In fact, if you recall the Mt. Gox exchange, that was one of the old Bitcoin exchanges of the old days, people today are still waiting to get some of their payouts, and there's always been a ton of delays around that. So, John, this whole thing has been like a total mess, and
Yes.
it's actually spooked a lot of people. A ton of people have left the industry. I've actually seen so many tweets from people who I normally consider to be very optimistic about crypto, just saying, look, I'm done. Like, this is actually worse than Terra Luna. This is worse than Three Arrows Capital. A lot of uncertainty out there in the market. A lot of people are actually saying they're throwing in the towel. What do you make of all that?
Well, they can do what they want with their funds and how they spend their time and livelihood, but really it had less to do with cryptocurrency, with blockchain products, and DeFi, which we as a community concentrated on. And it was fraud. It could have been fraud in any industry like this. And as I mentioned before we got on the podcast, I saw somebody's tweet, and I would give reference to it if I remember who it was. But it's like, when Enron blew up, which was nothing but fraud and cooking the books, people didn't all of a sudden say, well, gas and oil is really not a very good thing. I'm done with it. I'll never invest. And there probably were other people at the time said, well, I'll never invest in another energy company. Well, that would, over the course of that period of time, the last, what, 20 odd years, or however long it was, that probably wouldn't have been a smart thing because energy companies pay a really good dividend, and during energy issues like we're having now, they're profitable companies. So it's, kind of throwing the baby out with the bathwater. It was corruption, it was fraud, it was thievery, whatever you want to call it. It wasn't about the industry, although people are taking it that way. It was about one guy who really messed up, and I think it's kind of funny because all this took place on social media and on Twitter. This wasn't the New York Times covering this story, although they eventually did. All his comments, everybody, whether it's CZ, whether it's SBF, it was all on Twitter,
Yeah,
and
with this
Sam,
article on the screen here, all a bunch of Twitter links. Like the news was breaking on Twitter. I was just in a Twitter space earlier today. Like it's all happening by the minute.
right, and SBF does this, long tweet thread, this mea culpa. Hey, I hit the wrong button on my computer. It was labeled wrong, and I did, he's just making up crap, actually, and it's like it's interesting to see the lengths people will go to try to still maintain their good name. Because they're for a moment when he first apologized and we didn't know the full depth and the bankruptcy and tokens disappearing, and we don't have to go into that. There are actually people going, well, that, this is a rare thing. They gave him credit. Oh, well, you would never see this in under. He's being very public about it and apologizing. It's like, well, Al Capone could have probably, apologized too, but nobody was going to let him off the hook. He's still a dirty, rotten, scoundrel, right?
Yeah,
Murderer,
Bill
whatever.
Ackman was getting harassed on Twitter for saying, "Oh, this is a great move."
He deleted that tweet too. Ridiculous. But anyway, yeah, it is interesting that it's taking place on social media, particularly Twitter, and it's kind of as a side note. I mean, I have some friends that are very very privacy oriented and very much worried about their personal data and their data being used. And it's like they won't get on Twitter. It's like, no, I'm not going to have a Twitter account or a Facebook account. As far as Facebook goes, I don't blame them. Um, but I go, if you're following this industry at all, if you have any investment in cryptocurrency, I don't care if it's Bitcoin or it's Ethereum or whatever, if you're not at least paying attention to what's going on in the industry, that's kind of on you. I had people in forums of these people, they're privacy minded, and they're like, so what's going on with FTX? I'm like, this is 3 days after it blew up. I said, you don't know? I mean, do you have a Twitter? I don't have a Twitter account. I'm like, really? I mean, this is, whether you like it or not, or people like it or not, this is where information is mined. It's found. Now, of course, like anything on the internet, you can't believe everything you read, and you have to be a conscious consumer and try to do your own research on top of that. But it happens so quickly, so tremendously fast, that a normal news cycle of 24 hours or 12 hours wasn't sufficient to keep up with changes in what was going on, which is just fascinating. Of course, I spent many hours on social media keeping up with it, and probably blew a few days of productivity in my real life, but that's life. This is a unique thing to happen.
It is. It is. It's actually. I think we will look back on this week and remember kind of where we were when we heard this piece of news and that piece of news, because it truly has shaken the crypto industry in a way that is unprecedented. And I've had a lot of people who have survived other bear market cycles with crypto, and some have said this feels worse than Mount Gox. That was quite surprising for me to hear that from somebody, and that was a veteran who said that. I was not around during Mount Gox, but of course I heard how rough it was. But there's a couple of things that we should probably remind people of, that like if you try to stick to some of the values that we try to advocate for here on TradFi to DeFi, you most likely would not have been impacted by this. Now, obviously, John, our portfolios are down because of the ensuing collateral damage, right? And most
Mhm.
Bitcoin, Ethereum, and other digital assets are taking a beating because of all of this fear and uncertainty and doubt. However, crypto still works. Last I checked, John, blocks still
Yes,
produce,
yes.
right?
Well, when you're interacting with DeFi products and you're interacting with smart contracts, which is what that's built upon, uh, is is you're not trusting a guy behind the scenes that's taking your money and lending it out to somebody else. Now, does that happen in DeFi? Yes, but you know that. You know that that's how your funds are being used if you deposit it in a vault or in an LP position or something like that. Yes, it's being used, but you know exactly how it's being used. You're not being defrauded. It can happen, but there's ways to protect yourself from that. But and the magnitude of this is just at the conservative end, $10 billion. That's money lost, and I guess the thing, I'm not sure if we covered it in a previous call, but I was always very skeptical of when, during the Super Bowl last year, that the FTX was one of the largest. FTX, Coinbase, and Crypto.com spent hundreds of millions of dollars on Super Bowl ads. Hundreds, and I mean, and on other things, as sponsors of
Mm-hmm.
stadiums and things like this. And it really bothered me, um, because what that does is, Super Bowl ad is and they were giving away stuff too. I didn't watch the Super Bowl, I have to admit, but I know they were giving away things. If you opened an account or whatever, that they introduced millions and millions of people to cryptocurrency, but they never talked about self custody of your assets. It was just like I'm opening a bank account or getting a MasterCard, in the mail
Yeah.
free, and I get extra points. Great. And then people start putting their money into those products, and they never learned about security and self custody and all the issues that will protect you from, or protect you as much as humanly possible from these situations. And wow, that just really upsets me to know that now there are people who watched the Super Bowl ad, got into crypto, put their money on FTX, and it's gone. You know, guess who's probably never ever gonna trust cryptocurrency again? And that's the real shame. That's the real long-term damage.
Absolutely. We have people who have been burned and will not touch this industry again ever in their lives. We have another subset that will take years for them to come back to it. And then there were people who also, BlockFi also was suspended withdrawals and is most likely shutting down as well. The FTX Contagion was extremely it was started by an extremely irresponsible push for retail investors to jump into it. And I did a little bit of digging and saw a rabbit trail of just a bunch of influencers who were all getting paid by FTX to influence people to go onto these platforms. And another piece that came out that recently was saying how FTX required their portfolio companies that they invested in to keep the money that they invested into their companies on FTX. And so it's a
Right.
lot like an electric plug plugging itself into itself. It's like, they were asking people to take the money that they invested in them and be giving it back to them. And so you shared this really great tweet on the TradFi to DeFi Twitter account, which is that maybe the big Super Bowl ads this year should have been Ledger and Trezor instead of FTX and Crypto.com. Say more about that.
Yeah, well, that, and Ledger and Trezor are cold wallets. They're a way of taking your address and your password, so to speak, offline, that nobody can have access to your funds unless you actually directly give it to them. As opposed to the people who opened up an FTX or Crypto.com account. It's online. It's Web3. It's, put in your password and send your money from your bank account, and they'll give you 5, 6%, for staking a certain token, And but the problem is you don't have control over that, right? It's deposited in their bank, so to speak, and
That's
they're
like I
not
said
ready.
here. So I mean, some lessons, right? Not your keys, not your coins, right? And so when you
Right,
have you've secured your private key on your physical person in your physical cold wallet. That's not anywhere else. It's not on an exchange. It's not with somebody else. It's not off earning interest. It's not being lent to somebody else. It's yours. You have control over it. And when you bring your crypto to an exchange, or you go to an exchange, you buy it, and you leave it on the exchange, they basically are just giving you an IOU that you have to count on them to then someday redeem and say, hey, look, I have 1 Bitcoin on your exchange. I'd like it back, please. And that's what happened with
right,
FTX. People went to FTX and said, hey, I'd like my Bitcoin back.
right. And and you talk about a run on the bank, and prior to modern banking that we have, a lot of the banking panics, and even up through the depression, it's like people would go to the bank and say, give me my money back. And it's like, it's the same thing as FTX. Well, we're suspending withdrawals. You can't take your money out. Why? Because we don't have it anymore.
I thought we were supposed to be fixing this, John. I thought we
Right.
were supposed
But
to be
it's the
different.
same problem. It's the same problem
Yeah.
because why? Because they didn't rely on the blockchain. They didn't rely on self custody of assets. They weren't, they didn't, maybe didn't even have the awareness of smart contracts in DeFi. They relied on a traditional relationship, just like people. They
Yes.
thought it was just like a bank. If I put my money in with Bank of America, I know when I go to pull it out, it's going to be there. You know, um, that's a different set of problems. But at least that's. I think that's what was in people's minds, that it was marketed to them in these Super Bowl ads, and it's just like having a bank. We'll be your bank of crypto assets, and blah 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 blah. And they just created a system that just spectacularly blew up in their face. But it was due to fraud. It wasn't because the technology of cryptocurrency was bad. It was because people are bad.
Yeah, we'll take that as an opportunity to share one of the other bullet points that I shared in the article, which is that you really should be avoiding these risky centralized exchanges, and you can kind of tell which ones are more risky than others. I would say most exchanges that have their own token, you should be very skeptical of. It's always better to secure your own crypto off the exchange, right? Go to the exchange to buy it, but then pull it off, right? But if you do end up working with one, CZ had a couple of interesting comments. He said, number one, never use a token that you've created as a collateral, so avoid any exchange that's doing that, which is what FTX was doing. And then don't borrow if you run a crypto business. A lot of this borrowing and lending activity was something that SBF specifically called out to Congress. This is the part that drives me crazy, John, is that this guy had the audacity to go to Congress and act as the spokesperson for our entire industry. And he used this phrase that I thought was really funny. He said, crypto exchanges are more transparent than more traditional brokerages because they do not rely upon, and he used the words bespoke, bilateral, non-transparent agreements that are not auditable and not viewable on chain and are just kind of something that you rely upon. You kind of have these sweetheart deals, right? Well, hey, we're SBF when we're FTX. You can trust us. We're good for it, right? He's guilty of the exact thing that he said that the traditional finance ecosystem is guilty of, and I find that to be the most obnoxious thing is the particular hypocrisy with which this guy was advocating for legislation and policies that would have actually harmed DeFi in many cases. There's a few tweets I have of him advocating for regulating the front ends of cryptocurrency, decentralized exchanges, and other things. And this guy had the audacity to go to Congress and act like crypto in the way that he presented crypto was better, when in reality it was just as bad, if not worse.
Well, right, and isn't that always the case? Somebody who brings up an issue, and it's like, well, but it turns around they're guilty of the very same thing they're accusing somebody else as, and to actually go to Congress and be a spokesman for the industry, and you're doing exactly what you're trying to white knight the regulations to protect people from. You're guilty of it already, and it's like, I don't know how if they ever did regulate the way he wanted to, he was going to weasel his way back out of this if somebody found out about it. But You know, it's really a sad thing when the people that represent your industry to Congress, who's going to eventually regulate it in some form or fashion, are corrupt, spectacularly corrupt.
Well, and this is the part that's especially sad. So why don't we start transitioning to kind of like where do we go from here, right? So, it's clear that the regulators and lawmakers are going to seize upon this opportunity. And we already see some indications of it. Elizabeth Warren here saying that the collapse of one of the largest crypto exchange shows how much the industry appears to be smoke and mirrors. I don't disagree with that statement necessarily. A lot of this industry, unfortunately, there's a lot of scammers out there. There is some smoke and mirrors, but what she's missing is the point of blockchains, which are transparent. She says here, we need more aggressive enforcement and going to keep pushing the SEC to enforce the law and protect consumers and financial stability. And then Brian Armstrong, the CEO of Coinbase, had a pretty interesting response, which I thought was great. FTX.com was an offshore exchange not regulated by the SEC. The problem is that the SEC failed to create regulatory clarity here in the US, so many American investors, about 95% of all trading activity, have left and gone offshore. Punishing US companies for this makes no sense. Now, I agree with Brian on this, but I think that the onus is on us as an industry to try to explain the difference between the fact that this was a unregulated international exchange in the Bahamas. For those that don't know, SBF is allegedly still in the Bahamas right now. This is where the exchange was based, and it was not in the U.S. So the SEC's enforcement of something that's outside the U.S. is limited, right? But I'm worried, John, that they're going to go a little bit too hard and make it even harder for U.S.-based companies to build more reputable, trustworthy exchanges and crypto businesses in America.
Right, and that really should be their mandate. Yes, you want to protect people from fraud and things like that, but you also should cultivate an environment in the United States where these companies can play by a set of rules that you give them. And like you said, these exchanges, some of them were in the United States. Well, I think FTX was in Singapore and they moved to Bahamas. But the reason they weren't in the United States is because they didn't know about any. The regulations weren't clear, and they weren't going to set up. Whether they're honest or not, that's beside the point. But they were going to set up their business in a country that hadn't even put rules out on how that should be governed and regulated, and that's not going to happen now until there's a full set of regulations. If it's too stringent, like you said, they won't ever come to the United States. Maybe Coinbase will be the only exchange that ever exists in the United States and abides by whatever regulations come down. And that would be a shame because a lot of these companies, even protocols, are not based in the United States. They're all over the world because they don't want to be caught in a situation where, oh well, now it's illegal to do this in the United States, and their whole business is destroyed because they're a U.S. entity and they operate in the United States. And it's like, well, people are like, well, that's, how can you trust them because they're overseas? Well, I mean, my goodness, everything is online, and you don't know where anything's coming from anymore. People work remotely from around the world, so location isn't so important as long as they're abiding. They're playing by the rules, and so they could make this monumentally worse by regulating it the wrong way, and but they're going to have to do something because you mentioned a lot of people are leaving the industry. There's people like, well, I'll never invest in cryptocurrencies again, blah, 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 blah. Well, guess what? These large hedge funds and VCs and pension funds that were invested in FTX and a bunch of other things, they're going to leave and they're not coming back. There's a lot of money leaving the industry until I think there's some regulation because it has left people with a bad taste in their mouth. But for the retail investor, for the average person on the street, DeFi has worked perfectly through this entire thing. Yeah, I lost value because the cryptocurrencies have dropped because people have sold and left, so that obviously brings the price down. But, they still function the way they always have. They still are, still generating revenue. They're still generating fees. So things did not change one bit in DeFi, not a single bit. Nobody missed a beat. The stable coins held their peg. People could still get their money. So it's still there. It still works. It's still valuable. It still has a future, and we just have to be able to speak to people and make sure they understand the difference of what just happened and what actually happens on a day-to-day basis in DeFi and why it is better. Why you're not trusting some guy in the Bahamas with $10 billion of funds that he shuffles back and forth between different entities and does some really shady stuff. So yeah, it's not over by a long shot. There's still a bright future, but it's going to take some time. One of my big issues over this past year is how are we going to get to mass adoption and really onboard a lot of people? Well, guess what? It's further off in the future than it was a week ago.
It just got, if you thought it was closer than it was, a week ago, great, but it's much further now.
Yes,
And I think
and
you're
there's a
exactly
lot
right.
of work to be done.
There's a lot of work to be done. So why are we optimistic, John? TradFi to DeFi is a community that's, we're optimistic about crypto and DeFi, but I thought it was pretty fun that we share a couple of positives here. We had 9 different positive things that we could identify in this industry, things to be positive about and to remind ourselves are. So I'm just going to quickly go through a few of them here because they're great to meditate on, right? So number 1, crypto ecosystems improve democratization of financial information, and they expose the opaque nature of centralized institutions. Nothing's more transparent than a blockchain, especially when you compare it with these bespoke bilateral agreements that SBF had been getting himself into. Number 2, crypto lets you transfer wealth instantaneously anywhere in the world, and it doesn't require intermediaries. And this is an amazing thing that has a tremendous tool for freedom. Number 3, we can integrate internet payments natively without third parties dependent on their goodwill to allow us to be a merchant. And then number 4, you can save on huge merchant fees. So when you pay with your credit card and you are accessing a widget on a website, you're paying a bunch of intermediaries to make that transaction happen. Whereas with Bitcoin or Ethereum or other blockchain ecosystems, you can make that payment instantaneously. Now, what's another thing that's great about crypto is that crypto payments settle almost instantly with immediate finality, which eliminates significant amounts of counterparty risk. So John, if I wanted to send you Ethereum, it would just take a block or two for it to be confirmed. It would be in your wallet. You'd have it right away. You wouldn't have to wait upon my bank and your bank to communicate with each other and all of those fees that take place. You don't have to wait. You don't claw it back.
Or the typical, the check's in the mail. Trust me.
Bingo. Bingo. Yeah, so in like the ACH network, right? You can actually claw back an ACH up to 60 days when you initiate an ACH. So that time to finality is like 60 days on the traditional fiat rails. So this is another thing that makes crypto better. So again, is there innovation happening here, John? Yes. Is it going to take a while for it to be understood? Yes. But is it worth giving up on? No. Just because of what this FTX stuff has happened, of course, we're not going to give up on this. So number 6, we can self-custody our savings. We can actually hold our wealth in our hands. With a brokerage account, you're relying upon Schwab or Robinhood to hold the certificate to the stock that you own, but they could be handing it off to all sorts of other brokers underneath the hood. You have no idea about it. You have to trust them to do that, right? But you can't actually pull your stock off and put it into your hand. That's a pretty inconvenient thing. You can actually hold your stock certificate, but nobody does that, right? The brokerages are handling all of that for you, and you just have to trust that they're doing it, right? With crypto, you can actually hold it in your hand. You can actually hold it in an offline wallet, and you can keep it safe. So I'm still pretty optimistic. How about you, John?
I'm positive. I'm a little cautious, and we really need to put together a good strategy, and that's one of the things that we do at TradFi to DeFi in how to reach people, how to make sure people don't make these same errors, how to make them aware of what's going on, and it might not be as sexy as following some influencer on YouTube who has really crazy videos and all sorts of stuff, but it's important that you get the right information and you actually put it to use. I read another tweet today about, when you peer through all of the BS and try to get to the answers and actually do your own research and make sure you're dealing with honest people, you're going to underperform during exuberant markets. But in a situation like this, one thing you will do, and that's survive, you know?
Going through this experience puts you in a position to be smarter, learn more. I know, having burned my hand on the stove, I know not to touch it. Well, having burned my hand in a few, DeFi rug pulls in my own past, like I've figured that out, right? It's a great way to learn. We try to structure things here at TradFi to DeFi in such a way that we can help you be prepared for these sort of things and keep your eyes open to the risks that are out there. And so we would love for you to take a look at our blog, take a look at our podcast if you'd like to learn more. You can follow us on Twitter as well. And we're also going to post this article from the Medium, our Medium blog, in the description as well, so you can have access to that. And we hope that you all have a wonderful day and stay safe out there. And do your best to remain optimistic about this space. I do believe sincerely that there is a lot of innovation here still to be had, and a lot of amazing opportunities for people who are willing to do their own research, take the time to understand this amazing, exciting space. And eventually, we'll all be looking back on this very grateful for the opportunity we had to learn from some of these terrible mistakes from people in the industry. So I hope everyone has a great day, and I will talk to you again next time.